On December 1st, 2001, the Argentine government did something that sounds almost impossible if you've never lived through it. Overnight, they froze every bank account in the country. People with tens of thousands of dollars sitting in savings could suddenly withdraw only 250 pesos a week, roughly $250 at the time. The money hadn't vanished. It technically still existed as a number on a screen. But for millions of ordinary people, money you cannot touch is functionally identical to money that doesn't exist. Within days, people were banging pots and pans in the streets. Within weeks, the president had resigned and left the presidential palace by helicopter. And within months, something strange started happening in parking lots and community centers across the country. More than 2 million Argentines started meeting up every week to trade haircuts for homemade bread, accounting help for car repairs, and language lessons for vegetables, using almost no official currency at all. The people who came out of that collapse the least damaged usually weren't the ones who'd had the most pesos in the bank the week before. They were the ones who had something to offer that other human beings still needed, regardless of what the peso was doing that week. That's really the entire thesis of this video. Financial wealth is a claim on a system. A number in your brokerage account only means anything if the exchange is open, the currency is trusted, and the bank that holds your deposit is actually solvent. Skills are a claim on nothing but yourself. Nobody can freeze them, default on them, or devalue them with a policy announcement at midnight. And history keeps handing us the exact same lesson, generation after generation, in different countries, with different currencies and the same underlying pattern. Let's go back further to the United States in the 1930s. During the Great Depression, roughly 9,000 banks failed, the largest wave of bank collapses in American history. If your savings were sitting in one of those banks, in a lot of cases, that money simply ceased to exist. There was no federal deposit insurance yet to make you whole. People who had done everything right, worked hard, saved diligently, watched their life savings disappear along with the bank building. Wait, so saving money was actually the thing that failed them? Not saving itself, the system it depended on. The money was only ever as safe as the institution holding it, and the institution wasn't safe at all. So what did people actually do when cash effectively vanished from circulation? All over the country, communities started issuing their own local currencies, commonly called scrip, backed by nothing except an agreement among neighbors that it represented real value. In Minneapolis, an organization called Organized Unemployed Incorporated issued roughly $60,000 in its own scrip between 1932 and 1933, built entirely around bartered labor, often starting with farmers trading a share of the harvest for help bringing it in, then expanding from there into other trades and goods. None of that required a functioning bank. It required people willing to work, and people willing to organize what everyone could actually do for each other. The families who weathered the Depression best were disproportionately the ones with skills that didn't depend on a paycheck clearing. People who could grow their own food, repair their own equipment, preserve a harvest through a winter, or build something with their hands had options that a purely wage-dependent city family often didn't. It wasn't about being wealthier. It was about being less dependent on any single fragile system continuing to function normally. There's an even more extreme version of this same lesson from Germany in 1923, where the currency didn't just become hard to access, it became almost worthless while still technically existing. In 1922, a loaf of bread in Germany cost around 163 marks. By the peak of the hyperinflation in late 1923, that same loaf of bread cost 200 billion marks. The US dollar, which had traded for about 4 marks before World War I, was worth over 4 trillion marks by the end of that year. People needed wheelbarrows, suitcases, even buckets just to carry enough paper currency to buy groceries. Wait, the money was so worthless that carrying it was actually the hard part. Genuinely. There's a well-documented account of a woman in Munich who set down a suitcase full of banknotes for a moment outside a shop, and a thief ran off with the suitcase, dumping all the money onto the street first, because the suitcase itself was worth more than everything inside it. At the most extreme point, German households were burning stacks of banknotes in their stoves for heat, because the cash was worth less than firewood. Children built toy pyramids out of stacks of bills that used to represent real savings. And this is the part that matters most for our purposes. Multiple historical accounts describe ordinary Germans abandoning currency almost entirely during this stretch and turning directly to bartering for what they needed, trading goods and services with neighbors, farmers, and shopkeepers. Because a piece of paper backed by a government that couldn't stop printing more of it had simply stopped functioning as money in any meaningful sense. Notice what didn't collapse in that same window. A baker who knew how to bake still had bread to trade. A farmer who could grow food still had food. A doctor could still treat patients. None of those skills got printed into worthlessness the way the mark did, because none of them depended on a government promise to hold its value. They depended on the simple fact that other human beings still needed food, shelter, and care, no matter what a currency was doing that particular week. Now back to Argentina, because the Truque clubs are one of the clearest modern examples of this same principle playing out in real time. After the Corralito freeze, the peso itself collapsed in value once the government abandoned its peg to the dollar, and inflation tore through people's remaining cash. At their peak in 2002, the barter networks, known as clubs de truque, were used by well over 2 million people on a regular basis, some estimates for the broader informal barter economy running considerably higher than that. People traded directly for what they needed. A resident named Marcela Rica described it simply. You'd offer whatever you had, fix somebody's washing machine and walk away with eggs, do someone's accounts, and get your car repaired in return. Some networks even developed their own informal exchange units, essentially community-issued credits, functioning as a parallel currency built entirely on trust and actual usefulness rather than government backing. So what actually counts as this kind of crisis-proof skill? A few categories keep showing up in country after country, crisis after crisis. The first is straightforward self-sufficiency. Knowing how to repair things, grow vegetables, cook from raw ingredients, preserve food, or build and fix basic structures. These are unglamorous, and in normal times they can feel almost old-fashioned, the kind of thing you associate with a grandparent rather than a financial strategy. In a crisis, they're the difference between depending entirely on a supply chain and a paycheck, or having a second, more resilient option running quietly in the background. My grandfather canned his own vegetables every fall. I always thought that was just a quaint hobby. During the Depression, it wasn't a hobby. It was the reason some families didn't go hungry that winter while their neighbors were standing in soup lines. The second is sales, negotiation, and logistics. Being able to move goods, close a deal, or organize a small operation matters enormously when official money is scarce, because barter and informal trade only work if somebody in the chain actually knows how to negotiate a fair exchange and get things from the person who has them to the person who needs them. I can grow tomatoes, but I have no idea how to turn that into rent money. That's exactly the gap a good negotiator or a natural salesperson fills. Growing the tomato and turning it into value are two completely different skills. In the Argentine barter clubs, some of the most consistently successful participants weren't necessarily the ones with the rare skill on offer. They were the ones who understood how to organize the trades themselves, matching what one person had with what another person needed, essentially acting as an informal broker inside a system that had no formal brokers at all. The third category is anything that meets a genuinely primary human need. Medical knowledge, teaching, caregiving, even technical skills like programming tend to retain real value no matter what the currency is doing, because people don't stop getting sick, stop needing their kids taught, or stop needing systems maintained just because the stock market is falling. A nurse, an electrician, or a plumber doesn't become less necessary during a recession. If anything, demand for basic repairs often goes up because fewer people can afford to simply replace something broken instead of fixing it. The fourth is less tangible and arguably just as important: emotional control and adaptability. Staying calm under pressure isn't just a personality trait. It's a financial skill in its own right. Panic is what turns a temporary problem into a permanent loss. During the 1929 crash, some of the worst single-day losses in the market came specifically on days when forced, panicked selling accelerated, not on days when investors simply sat still and rode out. It's the same instinct, whether the crisis is a stock market crash or a frozen bank account. The Argentines who did best in the Corralito weren't necessarily the ones with connections or extra cash. They were often the ones who stayed level-headed enough to start organizing a barter network instead of standing outside a shuttered bank, yelling at a door that wasn't going to open. And the fifth is community itself. Every single example we've covered, the Minneapolis barter script, the Argentine truque clubs, the neighbors trading directly with each other in 1923 Germany, ran on networks of people who trusted each other enough to trade directly, often without any formal contract at all. When official systems freeze up, your actual safety net often isn't a bank or a government program. It's the number of people around you who know what you're capable of and would help you or trade with you, specifically because of that. Nobody builds that kind of network during the crisis itself. It has to already exist quietly before you ever need it. None of this is ancient history either. When supply chains seized up in 2020, the people who could grow a portion of their own food, fix their own car instead of waiting months for a part, or pick up freelance work online while their regular job was on pause, simply had more options than people who could only wait for a system to fix itself. You don't need a full-blown currency collapse for this lesson to apply. You just need any moment where the normal channels get slower, more expensive, or temporarily unavailable, which happens on some scale almost every single decade. Now, to be clear, none of this is an argument against saving money or investing in the first place. The people who came through these crises in the best shape usually weren't choosing between having savings and having skills. They had both, and the skills were what gave them options and breathing room in the specific window where the money alone couldn't reach them. A house or a stock portfolio can absolutely still make you wealthy over the long run. It just can't feed you the week the bank shuts its doors. That's really the whole difference between paper wealth and practical wealth. Paper wealth is a promise, backed by an institution, a currency, and a system that has to keep functioning for that promise to mean anything. Practical wealth lives inside you, and it doesn't care whether the exchange is open today. Back in Buenos Aires in 2002, the people meeting up in those parking lots every Saturday weren't rebuilding the peso. They were proving on a massive scale that when the official system stops working, usefulness is still a currency that never stops clearing. If you want a full breakdown of exactly which skills to start building first and how to actually practice them before you ever need them, let me know in the comments and I'll make it the next one.